All right, and we are live. Yes, earnings season continues with big tech, Amazon reporting earnings and Apple reporting earnings, and it is split. I mean, one is up, the other one is down. We will take a look at this. Then also this morning, the jobs report, and we did have a shocker. And we'll take a look at how markets reacting to this shocker this morning. We have a lot going on this week and also next week. Next week is the presidential election here in the US, and we also have Fed week. So there's a lot to talk about. And with that said, let's get started. So today is Friday, November 1st, and welcome to Coffee with Marcus and Mark. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And Mark, wow, look at this. I mean, yesterday we have to bring up the 50-day moving average, and we really kissed the 50-day moving average in the S&P 500. It looked bad yesterday.
Oh yeah, Marcus. I mean, we gapped down, we continued to slide, we ended at session lows, and it looked a little nasty. But we also know that sometimes these pullbacks can be buying opportunities, and at least from what we saw earnings wise and report wise, and also just looking at the chart, it does look like investors thought this was an opportunity to be a buyer going into the weekend.
Yeah, so yesterday the S&P down 1.9%, the Nasdaq got hammered yesterday, down 2.8%, and the Dow yesterday down, what did we have in the Dow? 1% down. So I mean, the Dow even trading below the 50-day moving average, but bouncing right back today.
Yeah, it's still gonna be a negative week. So the week well, actually the Dow, I'm sorry, the Dow is gonna finish positive most likely, but negative for the Nasdaq and also the S&P. So interesting to see that rally with the Dow today going positive for the week.
Yeah, and I mean, we also should probably just look back of what happened in October, because yesterday we did wrap up October, and we are here for the Nasdaq. A down month for the Nasdaq, down half a percentage point. For the S&P, down 1 percentage point. For the Dow, down 1.3%, and for the Russell, for the mid cap, also a down month. So October down for all indices.
Yeah, October can be a volatile month, and it sure was this week. Up and down, back and forth, a lot going on, a lot to move the market. And like you said, Marcus, even next week's going to be another one that gets interesting.
Super busy, absolutely. So, I mean, this week a lot about earnings, because we had tech earnings, and we saw Alphabet reporting earnings, and it was good. Alphabet, Google up. Then we had Microsoft and Meta reporting earnings yesterday. No, 2 days ago on Wednesday after the bell, and we were going down. And then yesterday after the bell, Apple and Amazon reporting earnings. Let's take a look at these two right now. Let's start with Apple, actually. Oops. AAPL, that is the symbol. Here we go. I mean, Apple right now down 1.6%.
Yeah, they did better on revenue, but missed on their earnings per share there, and it looks like. I had a note on this, and I don't see it.
Yeah, I didn't look into this. I mean, overall, it seemed that it was kind of positive. At least Apple tried to spin it positively. But yeah, when you're missing the earnings by 40%, I mean, they need to explain why. Because, I mean, these
Yeah.
analysts, they're usually pretty spot on when it comes to the earnings and the revenue. As we can see here, the revenue, the analysts estimated it perfectly, almost perfectly, right? A little bit better than expected. So Apple would have probably some explaining to do of why they missed profits by 40%.
Yeah, that's interesting.
All right. And then we have Amazon, and Amazon this morning up and away, up 7%. I mean, Amazon just yeah, stellar earnings.
Yeah, solid quarterly report there for Amazon. An earnings beat, also a revenue beat. They said that their cloud and advertising business really helped beat expectations this quarter.
Yeah, and so with the cloud business, I mean, this means basically demand for AI is still there. And looking at the heat map, this is where we see this morning, yes, tech is back. Amazon up 7%, Tesla up 1%, Google and Meta slightly bouncing back, Nvidia up 2.8%, Microsoft up almost 2%. So, yes, happiness today across the board.
Yeah, Intel also reporting, and they are up better guidance in addition to earnings there.
Yeah, it seems that
And
the
so,
earnings still a massive miss here. But I mean, ever since they announced their restructuring plan, it seems that Intel at least has stopped this fall, right? I mean, we see that Intel from the beginning of the year at some point was down 63%. Right
yeah,
now, still for the year, let's see, where do we stand for the year? Still down 53%, but the slides seem to have stopped here.
yeah, two nasty quarters. And then this last quarter, even though there was a miss on earnings, a beat on revenue, and the guidance, maybe they can hang in here around these levels.
Yeah. So, in addition to having a super busy earnings week, we also had a busy week on the economic calendar. And I mean, we had yesterday already the core PCE price index pointing in the right direction that inflation is right now running at 2.1%. So, super close to the Fed's goal of 2%. That is good news. And then today we also had a jobs report, and the jobs report. ah, I mean, this is where traders, investors already feared that it might be bad, but holy cannoli. I mean, this is the worst that we have seen in 4 years.
Yeah, worst since December of 2020. You can put a little asterisk next to this. You have the headline there. Only 12,000 jobs added, but it was impacted by hurricanes and also some strikes. But it was interesting because jobs this week not too bad overall from what we saw. But as far as the biggie here, non-farm numbers, extremely low. And there you see the graph there.
Yeah, I mean, usually we see jobs being added, monthly jobs creation is in the hundreds of thousands. I mean, really, the low watermark here is around 100,000. Then we see usually going up to around 300,000. So between 100 and 300,000, that's kind of normal. The 12,000, this is why here on CNBC, they even put an arrow there like, okay, do you see this? This little blip, this is what happens in October. And yes, I mean, again, traders and investors knew this going into this jobs report. So therefore, it also seems that this morning they're shaking it up because the unemployment rate remained the same at 4.1%. So the unemployment rate didn't tick up.
Well, and this is where also the Fed's dual mandate, price stability and maximum employment, and there were some concerns about uh, the economy or employment and yields staying higher, not yields, rates staying higher. So I mean, this is where a cut in December or seems likely, or next week. I'm sorry.
Yeah, let's take a look at this because again, very interesting, huge shift. Look at this right now. Almost 100% probability for a 0.25% cut. And as you know, until recently, we were kind of at a point where we still had a few people in the camp of leaving rates unchanged. It was in the single digits, but it was still there. Now it has completely disappeared with the PCE index, that the inflation that is in line with expectations, and also the jobs report that's kind of bad, and we knew it.
Yeah, and I mean, this to me is no surprise because the quarter point is pretty much priced in. But like you said, we shifted from maybe no cut to a tiny sliver of 0.5%. The 0.5% is extremely unlikely. But that shift there because of the jobs report, that would make sense. So I think that's why the markets are shaking it off and actually positive with this week jobs report, kind of discounting it because of some factors that could lead to the lower jobs that were added, but also supporting what the Fed is most likely to do next week.
Yeah, if you look at a 5-minute chart of the S&P today, we opened higher, pushed higher, pulled back a little bit a few minutes ago. Right now, trading still close to session highs, but not quite yet. And I mean, the race is on for being the largest American company by market capitalization. Look at this. We talked about it, and right now, it is only a few $1 million separating Nvidia and Apple. Nvidia getting ready to take over Apple as the largest American company by market capitalization. It could happen today.
I mean, that's such a small difference. Well, it's a huge difference for some people, but as far as Apple and Nvidia goes, yeah, I mean, a sneeze and Nvidia could take the top spot.
And I mean, I don't know for how long Apple held the number one spot. I mean, it has been forever and a day. It seems that it has been for years. So Apple being dethroned, oh wow, this would be that would be quite something. All right,
We'll see.
let's take a look at our positions and see what's happening. So, WTF. First of all, we had 3 new positions today popping up. Not surprising. I mean, after the slide yesterday, fear was back in the market, and today we are winning the fear with our WTF strategy. And first up, MET, after we did get stopped out right away, a new entry signal here today. So, what did you think about this one?
Yeah, Marcus, I mean, this is where we close the trade according to plan, but with a new signal, things were still intact for a signal to be identified. So I took this one.
I took this one too. 78.45 the entry right now, trading already $1 above, so this is working out great. Then next on the list, PG, Procter and Gamble. Procter and Gamble, as you can see, also has been sliding to touching the 200-day moving average there and then giving us a signal. So I took this one. What about you?
Yeah, I mean, this is where I don't want to overthink these signals because you could talk yourself in or out of trades, and I like to trade it just as a clear process and plan. But chart wise, I love how this looks, and I took it.
Yeah. So I got in at 165.35 and right now trading at 166.23, almost up $1. And then the third signal that we got today was RTX. RTX stands for RTX Corporation. So they are in the aerospace and defense. And so there's another signal. I took this one. You took it as well. And right now, this is the one that is a little bit down here from our entry.
Yep, I
So
took it as
entered
well.
at 121.50, right now trading at 119.87, so up like $1.70. And then we still have quite a few open trades. I mean, we have still CL, Colgate, Palmolive, and today a little bit up 0.3%. I'll take this right now, battling around the 200-day moving average, as we can see here on the chart.
Yeah,
DUK, Duke Energy, having a great day yesterday with the market crashing and people getting out of tech, finishing higher, 1.1%, kind of the flight into safety. Today, down 0.5%, not much for us to do, trading right around our entry price. So let me just plot it here. We entered at 115.18 and right now trading at 114.55, so down 60 cents. GE Aerospace. Oh my gosh, this is working out great.
it is. It is. So pulling back a little bit and added to this at 170.72, and looks like a nice place to have added.
Yeah, because I mean, this is where we added at a 5% drop. So originally we went one along at 179.70. Then we added to this. And as you can see, this brought down my cost basis to 175.50. Right now trading at 174.22. So only a little bit more than $1. below our cost basis, so our new cost basis. So this ad is working out great. Loving it.
Just like we'd hoped.
Yes, and Honeywell today having a great day, 1.5% up. This is big for Honeywell. And we might get an exit signal here on Monday. We went long at 208.06 right now, trading at 208.71. So we might close this with a small win. Let's see what happens here. We bounced off very nicely off the 200-day moving average. This was what we were looking for. So we won the fear. Right now it's going up. HON, Honeywell, come on, keep going.
Just what we're looking for.
Right. Coca-Cola, on the other hand, just unchanged today. Yesterday, down a little bit, approaching the 200-day moving average. And let's see, in Coca-Cola, we are down 2.8%. So a little bit too early to add to this position, although I would be very interested adding to this position. But right now, we entered at 67.05, right now trading at 65.28, so down $1.70, $1.60, something like this, and nothing to do right there. Finally, ExxonMobil. I mean, XOM. Wow, what a morning for oil and gas here. I mean, gapping higher, trading at 120 right now, pulling back, trading at 117.15. Right around our entry price here. But I mean, this morning it almost looked like it was up and away, and then a little bit of a pullback in oil and gas place.
Yeah, real nice start to the day. That's a little bit too bad, but hey, not out of it yet. We'll see if when we get an exit.
Right. All right. So let's see. What about our wheel position? So hopping over there, and first up, let's talk about BP because this is a stock that you're in. And again, oil and gas today at first opened higher, pulling back a little bit, still up 0.4%.
Yeah, and again, nice start, but I'll take the win.
Yeah. HL, Halliburton, very similar. So a really nice start. Still trading up, and right now we see that it might have found a bottom at around 27.50. And from here on out, let's move higher so that we can sell calls again. All right, and then we have our little buddy CSIQ. What a volatile puppy. I mean, this is definitely jumping around more than your lap. Don't want to say his name because I know that he is in the
Yeah,
background right
he'd
now.
perk up and be like, "Oh, treat."
Yeah.
Gosh, just another day with CSIQ up 5%. Love that it's climbing back up and getting above 15. Let's just keep going now.
Let's keep going. Let's do this. KSS calls right back in this range here, right now trading at the lower end of the range. And I mean, has just been working out beautifully. So today we are trading at 18.24. My break even at 19.59. My cost base is at 21.50. Has been trading here in the range forever and a day. So nothing for me to do today. And we'll see where we end up here in the next few weeks. Merck, on the other hand, Merck yesterday, Merck had a really bad day because missed earnings, provided lower guidance today, bouncing back a little bit, down 0.3%. I think most of the bounce back happened yesterday. So let's see. Right now, trading still above 100. My break even here at 114.70. So really, come on, Merck. Let's do this. Let's move higher.
Time to move.
Time to move. All right, Mark. What do you think about UPS, our little buddy UPS? Geez, I mean, another volatile one, isn't it?
Yeah, and I'll take the win. I'd like to see a little more enthusiasm on its way back up to that earnings post earnings move, but hey, a win's a win, up a 0.5% right now.
Yeah. So there you have it. These are all of our positions. And let's see how traders are reacting and what is happening here on the first day of the month after this shocking jobs report. But before we do this, I think it's time for that joke. And I see, Mark, that you lost all your hair. Was a little bit too much maintenance?
Yeah, I had to shave. It was too hot for me.
Yeah. All right. What do you got for us today?
All right, Marcus. Well, I'm at that age where I need to start thinking about what comes next for me, and what uh what might happen when I'm no longer here, and on this planet. And so I was thinking about getting buried or cremated, and I decided that I want to be cremated because it will be my last chance to have that smoking hot body that I've always wanted.
God, this is bad. That's disappointing. All right, let's go quick and easy here. What do you call a cow with no legs?
I do know this one, but what?
Ground beef.
Hey, what do you call a cow with three legs?
I don't know.
My tip. What do you call a cow with two legs? Lean beef.
All right. You got way more there. All right, let's see what's happening. And in the S&P 500 right now, we are trading at session highs up 1%. The Dow, look at this, carried mainly by Amazon, up 1.2%. But also the Nasdaq trading at session highs here, right now up 1.2%. The Russell 2000, after a strong start, pulling back a little bit, still up 1%. And the VIX, the fear index, is down again today. I mean, down 6.5% after being up yesterday, still holding above this 20 level. So we love higher VIX levels, the volatility, because this gives us more premium when selling options. But super interesting day. So yeah, Mark, I mean, as said, it seems that the Dow might end up the week positive. I don't think it will be possible for the S&P 500 and the Nasdaq.
Yeah, it looks like the Dow will have a win. But hey, positive day, and I don't expect a whole lot more today. We'll see, but I think we'll end the day up nicely for the indices.
Yeah. And next week, big week. So we have the presidential election on Tuesday. We have the Fed meeting on Thursday. So a day later. So it will be a big week and you don't want to miss it. So make sure that you subscribe to the channel. If you like today's show, give us a like. If you think that this was information worth sharing, there's a share button somewhere here on the page. Please feel free to share it with anybody who might find this beneficial. And with that said, have a great rest of your day and enjoy your weekend.
Happy trading, everybody.